Hi, my name is Alex, CarlyTruthGustinShow.com. You may want to know what you qualify for a mortgage, and I'm going to tell you this is the payment you're going to qualify for you. If I say $2,000 a month, you get excited, you go out there and you find the house you want, and because I told you $2,000 a month doesn't mean that's what you really can afford. And I find that people are always going to their maximum, which is a very good thing to do, and I'll explain why in a second. But what I qualify you for and what you want to afford are two different things, because when you're pressing up against those max ratios, you have one little hiccup, you can be in trouble, because these ratios that these banks allow for on closing loans is really pretty aggressive when you really look at the numbers after you pay income taxes, after you pay for your groceries, after you pay for your gas, your car, your cell phone bill, your car insurance, your cable bill, your gas bill, your electric bill. You're really not left with a lot of money. So these numbers that we qualify you for are very, very aggressive. So keep that in mind. Now, when I qualify you and you go and you want to look for a house, it's not a number. I can't just give you a number of what you qualify for. I can't just say $200,000 because it depends on the property taxes, it depends on your insurance, it depends on HOA fees. Every house is a different combination. So keep that in mind when I'm qualifying you, that I'm going to give you a payment. I'm going to help you go over each house that you're looking for, so that one fits, this one does not, that one fits, this one does not. We're going to go back and forth and we're going to figure it out, and you're going to kind of figure it out with me. So keep that in mind when I'm qualifying you for a mortgage. So those are my reasons for qualifying and what you can afford. And I want to go back to one of the points I made earlier. The reason it's good to go maxed out in the beginning of when you're buying a house, and why it's okay that you're maxing out, even though it could be a struggle the first year, is because if you're young or medium-aged person and you're not kind of towards the end of your working years, you would expect that you're going to keep getting raises. And then when you after 5 years, you're going to look back and that mortgage payment that you were maxed out on now will be completely within your means, and you'll be happier that you bought a bigger house, let's say, or a nicer house, because right now is not exactly what you're looking in 5 years. Now, if it looks worse for you in 5 years, then that was a mistake, but hopefully we all think that we're going to get more and more money as we grow. So therefore, right now, max it out, because in 5 years that you're look back and say, oh, this payment's completely affordable. I'm glad we bought this. Otherwise, you'd be finding yourself selling houses and buying them because now you're making more money. Like, well, this house isn't nice enough for me anymore. So you're going to find yourself buying and selling more houses if you don't max out, because you're staying within your means. But if you keep making more and more money, you may not want the house that's within your means then, because it's not nice enough. So that's one reason why it is a good push to push the max ratios. But keep in mind, make sure you think that you have a good career path, and you will be getting promoted, and down the road, yes, you're going to have more income, so therefore press up to your max ratios. If you got any questions on this, give me a call anytime, 630-915-7550. Please subscribe.